Continuing with the scheme of transactions not regarded as a transfer, let us now see some more aspects. The first one being, I'll just highlight the relevant headings in green. Transfer of following. Okay, and let me now move on to the pencil. Work of art, archaeological, scientific or art collection, book, manuscript, drawing, painting, photograph or print. Now if you remember, or if you just have a closer look at this, these are basically some of the things which are important from a national heritage kind of a perspective, right? So if suppose a person is having any of these things, he's having some work of art, some painting which is, let's say, 1,000 years old, or he gets some kind of an archaeological evidence or survey or some scientific collections. Okay, the government normally want to preserve these things, okay, and these are normally kept in the museums and all these public places, right? So to get these things from the people who actually have them, to encourage them to give it to the government, this is an incentive which is provided. So if you transfer any of these things, and the transfer has to be made to whom? The transferee has to be the government, okay, university, National Museum, National Art Gallery, National Archives, or any other such public museum or institution as may be notified. So if you transfer, if a person transfers any of these things to any of these following person, which is considered to be of national importance or to be of renown throughout any state or states, then these transfer are not treated as transfer for capital gains tax purpose, which means that the person who's actually transferring this and will get some money from the government will not have to pay any taxes on such transfer. So let's say, for example, just for the sake of understanding, let's say A is a person, he transfers some archaeological stuff to the government gives him 10 lakh rupees, right? Normally, because he's transferring a capital asset to the government, it should be taxable, okay? But because of this specific exemption, because the transferee is the government, this will not be liable to capital gains tax, right? Second, conversion of bonds, debentures, debenture-stock or deposit certificate in any form of a company into shares or debentures of that company. Let me give you an example again here. Let's say, for example, this person subscribed to compulsorily convertible debentures of company X. Okay, these debentures, according to the conditions which they were issued, are convertible into shares of company X, right? So these compulsorily convertible debentures, when there is a conversion into shares, what happens is this person gives away these debentures and he gets shares in the company, which is something like an exchange, right? And we know exchange is a transfer. But under these provision, there is an exemption given that when you do this, effectively, you know, if you see, the value of the debentures and the value of the shares will be the same, assuming the conversion rate and everything is fair, right? So the law says that in such conversions, we are not going to tax it. So conversion of bonds, debentures, debenture-stock or deposit certificate in any form of a company into shares, debentures of that company. This is important. So it cannot be that you have debentures of company A, okay, and company A says, look, I own some shares in company B. I will give you these shares. You give me back these debentures. No, that is not exempt. What is exempt is if a company A converts these debentures into its own shares. That is exempt from tax. Third point, conversion of foreign currency exchangeable bonds into shares or debentures of that company. Now, just to give you a sense of what is foreign currency exchangeable bonds, these bonds are issued by Indian companies to people outside India who subscribe to them in foreign currency, right? till the time these bonds are converted, these are convertible into shares of the Indian company. Okay. Till the time these are converted, the Indian company pays interest to the person who owns the bond. Okay. And then after a defined period of time, this owner has an option to convert them into into shares, right? So when you convert these bonds into shares of the company, that is not taxable, that is not regarded as a transfer, and therefore is not taxable event. It could be into shares or it could be into debentures. The last one is transfer of a capital asset in a reverse mortgage in accordance with the scheme made and notified by the central government. Again, reverse mortgage, I hope you understand what's the meaning of that. That is the case which is, you kind of just mortgage your house. Mostly it's kind of, you mortgage your house. You are the owner of the house, you mortgage it, and you keep on getting some EMI. Okay? Some money from the bank. So if there is any transfer of a capital asset in reverse mortgage, as per the scheme framed by the central government, then this reverse mortgage is not liable to capital gains tax.